welcome back to yet another panel. Today, we have institutional adoption as part of the TokenizeThis conference. I'm joined by Maredith Sapp, Director of Business Development, Digital Assets at WisdomTree. Great presentation earlier today, Maredith. And Anthony Moro, CEO of Provenance Blockchain Foundation, always on the up and up. Love covering both your firms and our research, our reporting, and of course, talking to our clients about all the amazing work. Listen, this is going to be a great discussion. I mean, there's so many avenues to take. We have WisdomTree's approach with WisdomTree Prime. Obviously, WisdomTree is a firm that's kind of seen the evolution from individual stocks, bonds, other products into ETFs, and now into mutual funds, and now into ETFs was the original goal, and now into 1940 Act digital funds. Amazing stuff there. And Provenance Blockchain is definitely a professional or a financial services built out layer one blockchain, a lot of different partners, a lot of name brand partners building on the asset-backed security side, on the private fund side, even on the tokenized deposit side. So always some fun stuff. Why don't you guys, just quick intro just for the whole crowd. We'll keep it nice and short, but Maredith, if you just want to kick it off again.
Yeah, sure. Absolutely. And thanks again for having me. Maredith Sapp, Director of Business Development at WisdomTree. As Peter already kindly introduced us, a $95 billion global asset manager based out of New York. We also have a large European business. Traditionally, historically, an ETF issuer, and now we're really investing in blockchain technology and particularly tokenization of real-world assets. So thanks again for having me. Looking forward to the conversation.
Fantastic.
Thanks, Peter. Hey, Anthony Moro, CEO of Provenance Blockchain Foundation. We are a sovereign layer one built in the Cosmos ecosystem, and we are a public chain, but we're properly permissioned and built specifically for the regulated financial services business. We think our governance and our technology makes us the chain that's going to certainly be a large player in financial services going forward. As a result of our technology and our governance, we believe the largest public layer one by the metric of financial assets outstanding. Some people call them real world assets. I like to debate that term. If you're talking about digitally native assets, or do they exist in the real world or not? Maybe we can talk through that a little bit. But I spent my career, if this is Maxson joining, 20 years at BNY Mellon, running various security servicing businesses. And then from there, I went into a publicly traded New York Stock Exchange listed REIT, and then found my way into Provenance Blockchain a year and a half ago.
Fantastic.
Great.
Thank
Apologies, everyone. Go on.
Hey, Maxson, how are you doing?
I'm doing well. Apologies for the technical problem. We tend to block everything, as Anthony probably know, because he spent some time back on BNY Mellon, but yeah.
Sure, of course. If you want to give a quick intro, and then we can go back and forth kind of on some topics in the next half hour.
Perfect. First off, apologies again for all the trouble. My name is Max. I work in our digital partnership and strategic investment team at Bank of BNY Mellon. I sit here in London, but majority of my team are based out in New York, in the US. I spent some time at Barclays Corporate Strategy, previously trying to write up their digital asset strategy. Before that, I spent 3 years at Finastra trying to tokenize syndicated loan. Back then, when tokenizing wasn't really a cool thing, but yeah. So very nice to meet everyone.
Awesome, and this is an interesting blend we have on here actually, because WisdomTree is an active issuer, Provenance is connecting that via the chain level, and of course BNY has to act as that base level on the custodial side. Also, the Barclays reference, obviously big news a couple of days ago with JP and with BlackRock. So, I mean, it seems, Anthony, I know you love in your pitch when people say, when are institutions entering, and, they're already here. So I figured, to kind of keep it high level and kind of keep it based, what are the real conversations being had? What are some of the cooler use cases that are really taking off or finding traction? And where, I guess, should other institutions look? So, Anthony, maybe you even have the best boots on the ground view of this.
No, fair enough. And yeah, certainly WisdomTree is absolutely one of the best use cases, but I'll let Maredith, I won't steal her thunder. I'll let her speak to that. I think the only industry, the only asset class that has been truly disrupted so far by blockchain is the consumer credit, home equity line of credit space. If you think about it holistically, Figure and 10 of the 20 largest HELOC originators who are using Figure's technology, all built on Provenance, equate to about 6% of all HELOC originations in the United States. So if you think about 6% of an industry, you could make the case that it's the first one to be distributed, right? I think every other industry is probably less than 1% of assets have been put on any blockchain, whether that's fund services or private equity or you name it. HELOCs have been disrupted. And the reason that it's gaining so much force and speed is that blockchain makes the process cheaper, faster, and very importantly, safer than the traditional financial services model. Using the Figure and its movement mortgage, home rate, guaranteed rate, again, 10 of the top 20. Generally, you log on as a homeowner into a Web 2 experience, great UI, UX. You can apply in 5 minutes. You can get funded in 5 days. And while all that process is a good UI, UX, and Web 2, the loans are ledgered on the blockchain. And that creates some nice efficiencies. But where the real efficiencies come in is when you warehouse the loans and then you securitize the loans. You can take 150 basis points out of the process because of the immutability of public blockchain, the cryptographic proof of the loan. You don't have to go back when you're buying a pool of 1,000 loans and re-audit 1,000 loans. So that takes an immense amount of time out of the equation. It also takes an immense amount of cost in terms of funding the warehousing for that period of time, especially in this high interest rate environment. And at the end of the day, what it allows you to do is if you take out 150 bips, you can offer lower rates to homeowners at the end of the day. So you start to do a bit of societal good that only blockchain can enable. And then all these securitizations, there have been 4 or 5 or 6 now rated, first ever rated securitizations of blockchain native assets in the history of the world. DBRS Morningstar rated them. And like every other HELOC tranche, there's a AAA tranche and a AA junior tranche. And they get sold off in $300 million tranches to institutions. Now they get sold off to like every other ABS to a small handful of institutions. And, selling a $300 million ABS in the ABS world isn't a big deal. But I would just pose it that if you took that $300 million rated ABS and you sold it to 3,000 crypto wallets, the crypto press would go crazy because it would be the biggest, coolest thing ever. We're not there yet for retail. It's not a retail audience. If you can sell institutionally, you're going to sell institutional as opposed to retail. It's just easier. But these are real world examples of how blockchain benefits society, plus how blockchain is getting distributed institutionally.
Fantastic. Holistic overview right there. I love it. And I think that's a key thing. I'm going to steal one of those lines for the keynote later on today, if that's cool with you. No, awesome insights. And I agree, the ABS side, like if you can start seeing savings, as you're talking about, 150 bips is no laughing matter when it comes to the mass size. And we see blue chip investment banks getting in on the underwriting side. And we always talk, Anthony, about the inputs and the outputs moving more and more digital as a whole. And that's, I guess, we'll see those eventual real savings like in the full, end-to-end digital side. So pretty cool. Awesome. And Maredith, if you want to talk a bit more about, WisdomTree Prime, but even anything beyond that you're seeing that obviously, don't tell us stuff you can't talk about, but if you're seeing anything like in the future roadmap, we're all ears.
Yeah, absolutely. I would just add to what Anthony was saying too. I mean, I know in certain use cases, going to retail is really difficult, but in our case, that's our heritage and that's what we've done for many years. So actually for us, that made a lot of sense for us to start with retail and then go up market into institutional, which is what we're looking to do next year too, from a roadmap perspective. But from a retail perspective, we saw that as an opportunity with building out tokenized exposures in fixed income and equities, but also as one of the largest gold ETP managers to also do physically backed gold, actual tokens, not funds, and deliver a lot of those types of savings, efficiencies to what Anthony was saying for his process, but then directly to retail investors. So for us, gold through WisdomTree Prime is really exciting because it trades 24/7, 365, nearly instantly settles. Again, it's physically backed gold, able to be physically redeemed if you so choose, but it really is just a better way to hold gold, which is exciting for us. So as you start to think about that progression from traditional financial markets and products into blockchain and tokenized products, that's a great example and kind of our North Star of what we want to see the rest of our fund suite start to move towards. So we're excited about that. But for WisdomTree Prime, we're solving the problem of distribution and of access. So there's all these tokenized products out there, but how does someone, a normal US retail consumer, consume them? They're not comfortable with managing their own keys. They're not comfortable using a MetaMask. They don't really know how it works. So how do you make a really easy, slick interface to consume these tokenized assets and build out the ecosystem where frankly, the retail investor doesn't even know that they're using the blockchain, and they're using the blockchain. It just is a better way to invest. It's just an easier way to get access to different types of exposures. So that's what really excites us. But on the institutional side too, I think from this tokenized assets and real world assets, there's a lot of use cases for treasuries. I'm sorry that JP isn't on here today, but just what they put out yesterday with Barclays and BlackRock for collateral management, but even just broader use cases around securities lending pools, et cetera. There's a lot of different use cases that I think we'll see value over time. But we're still in that early adoption cycle of where we're moving from POCs, so proof of concepts, into commercial opportunities. And I think that's what's really exciting right now, is that I think we're on the cusp of that as we go more into production and as institutions are more comfortable building and actually executing these in real time. We're going to see more of that scale and that efficiency. And I think then adoption is really going to grow from that.
Yeah, fantastic. And from what it seems, it just makes, it makes everything a lot more actionable, I guess is the word to use. Having them on chain with the whole vision that WisdomTree's built out here. I remember even from the payment side, right? From the payment side, all that. You mentioned JPM. We know all the repo transactions. We know securities lending is not too far. Trade finance is another great case. There's so many that are just going to keep popping up, I feel. And then these are all little, not little, these are all niches in very big markets that are then just going to slowly but surely kind of steady and capture that market share. Maxson, would be very curious to hear kind of what you're seeing on the BNY side and what you guys have your eyes on, or if there's anything kind of mutual that you're able to share.
I think to Anthony's point and Maredith's point, I think a lot of the use cases that they mentioned is something that we're definitely looking at. From, I guess, our side, from a strategic investment perspective, to be honest, we've been looking at the market for some time, and a lot of it comes down to, think about operational efficiency. When you think about doing a trade with financial transactions, for example, there are three things that come to mind, right? You first need to have the information, and then you need to have the asset tokenized, then you need to figure out how to then make the payments on the other side. So we tend to think from that fundamental level perspective, right? So try to figure out what kind of assets are we trying to tokenize, and then try to figure out, how can we then facilitate those payments, as well as how can we facilitate those information that is relevant from those assets perspective. And on top of that, once you have those exchange become more, I would say, efficient, that's when the operational efficiency starts coming in, when your information flows better, when asset can settle quicker, as well as payments can move, DVP, for example. So I guess there's a lot of use cases around that. So a lot of the use cases that both Anthony and Maredith mentioned there are things that we're looking at in that sense, or that we dare say to like what the market is looking at as well.
Okay, awesome. And Maxson, we just got that's great background, by the way. Makes a lot of sense. We just got a quick question in the chat. What chain or chains is BNY thinking about working on?
Yeah, that's a good question. So I think they're definitely looking at different types of chains. I think it's very hard to say, one chain is what we're going to go with. I think it really use case dependent. So you could think of all your obvious chains out there, which we're looking at, but we're also working with, some chains that are less known, but then they might have some sort of capabilities that we are looking for. So yeah, I'm not going to name names at the moment, but we'll leave it to the team to come up with whatever it is that they're building on, because there's no fixed winner per se, I must say.
Sure. No, definitely. Even thinking about like the past, I was going to say few panels, the past couple of days of panels, a common theme, and even just what we hear from our consulting clients and our advisory work, where are the actual buyers of these assets coming from? And I've been asking this in a couple of different discussions. Very curious if you guys have any insights just from all three of your perspectives and levels. I know, Maredith, you touched upon this. We have individual retail buyers for certain products. We have a lot of companies who want to raise from retail, but is the market, it's tough macro timing, but we can't really blame that. It's like, I'm curious where the actual distribution channels are coming from. Are there traditional investment banks also now taking on these types of deals? Can I go to like Morgan Stanley's alternative distributions team and have them, kind of shop a deal around? The quality, of course. Is it family office buyers? Is it pension funds? Like, what does that look like? I think we're all ears as to what that whole landscape is sitting on.
So I can start, and then Anthony, I'm sure you have lots of ideas here and might want to respond on the chain topic too. And I should have given my background. I came from Morgan Stanley and started my career at Merrill. So I very much come from the traditional finance space before starting here. We think that retail investors are definitely low-hanging fruit per se in terms of people and consumers who are really looking for these assets and frankly looking for yield, looking for Bitcoin and ETH exposure, spot exposure, and also on the commodities front, again, looking for a better way to invest. And that's really the problem that we're solving there, and that's distributed through our WisdomTree Prime app. But on the institutional front, I don't think that the pensions are there just yet, or endowments or foundations, but definitely on the crypto native firms, the startups that have a lot of cash, idle cash, that they're looking for yield and looking for access. I think those that are more crypto native on the institutional in the institutional space are definitely looking for these. And you've seen that as there's been more treasuries come on chain and the volumes there have definitely picked up. But also from those larger shops that you mentioned, like the larger banks that a lot of us have come from, and definitely BNY too. I do think there's an appetite there. I don't think it's there yet for full-scale distribution, but I do think there is a institution to institution appetite to see how these transactions can be processed in a more efficient way. And I think from there, once everyone is comfortable, we'll see more adoption where there can be distribution through to the wealth channels or to their own retail networks, is what I'm guessing will happen over the next few years. But Anthony, I know that you've also have a few ideas too.
Yeah, I'll double click on some of that. So on retail, the 60-40 traditional portfolio, I think we've shown over this last credit cycle, is a troublesome model for a lot of investors. They wish they had access to alts in a way that they can hold it through the brokerage account or in their WisdomTree Prime app in a way that is relatively easy and a good UI UX. And they just don't have that option, right? You have some crowdfunding sites. You have some direct investment into private equity if you're an accredited investor, but the experience is terrible. Generally, you can't take out loans against your alternative investment, and you certainly can't trade your alternative investment. So generally, you're locked up for 7 years. So the experience is pretty horrible. Blockchain fixes a lot of that. If you're able to spin up an alt asset on chain and make investments homogenous, you can perfect ownership in them so you can lend against them. You can rehypothecate, right? The whole issue around that is you can't double lend. So if you can eliminate the double lending process with blockchain, you've got a big leg up. At some point, the ATSs, there's far too many ATSs in the crypto world, but at some point the ATSs will start to trade on the secondary market alternatives, whether it's the non-traded REITs or true private equity funds. Apollo, for instance, has a very large fund on Provenance. They have their stated intention to build out their entire fund platform on Provenance over time, so that you can log on, for instance, to apollo.com and you can get in and out of their funds as you wish. You can also lend against them because your ownership is perfected. So that's retail. Institutional, I'll say that figure has done $15 billion of consumer credit over the past couple of years. 100% of that has been bought institutionally. It's been a mix of digital securities. Everything is digitally native in, and the out part of it is how you own the investment. It's been a mix of signing papers that say you own a digital asset, and it's been a mix of DTC ledgered assets. And more recently, it's been digitally owned assets. So it's evolving as institutions get more comfortable owning digital assets. They're leaning into that. It is more efficient. It's just a different set of risks than what they're used to. But I would argue that a wet ink signature on a document that's held in the file cabinet at your lawyer's office does entail some degree of risk. It's just different risks. And then, Maredith set me up for the layer one conversation. I'm not a multi-chain kind of guy. I firmly believe that Provenance is going to be the blockchain for financial services, financial assets. And the reason being is, again, we're safer. There's a lot of great blockchains out there, but those blockchains have different purposes. They're all generally generic blockchains that require a bunch of smart contracts to be put on top of them to get to a useful state for, NFT art or crypto trading or gaming. These blockchains really can be anything they want to be. Provenance can really only be used for financial services. And because of that, the governance around that, it has to be properly permissioned, right? You don't want to, BNY Maxson doesn't want, 50 cents of its delegator value going to an EVM validator in North Korea, right? So these are the safety issues that a lot of other blockchains just don't consider because they're generic and multi-purpose. But these are the things that Provenance thinks about every day.
Interesting. Well said. Maxson, anything from the BNY side about, I guess, distribution? You're kind of on the base level with client accounts, if you will. I'm curious if you guys have had any discussions around that. Just a lot of good insight from Maredith and Anthony on that front, and even beyond that.
I think from a distribution standpoint, from our perspective, we obviously manage, Anthony probably know this, right? So we probably manage a lot of the accounts on the, I would say at the base level when it comes to who owns what. But at the same time, if you follow how investments are being made today, a lot of all this, TA function, managing who owns what, gonna get abstracted away because, on the line, you would have said, one distributor is owning X amount, let's say 20% of the entire asset, but that distributor will then manage their own ownership list of people who owns those assets, of those fractional of those assets. I think by tokenizing it, by pulling everything into one ledger, kind of just provides better clarity on who owns what, number one. Number two, and also makes things a lot easier. It will change the function of TA in general, which is people who actually manage who owns what. So I think the blockchain really brings out the idea of doing everything on one ledger instead of multiple different ledgers in multiple different levels, which is what's going on today in the investment world, right? From your asset manager, when they create those assets, they break it down into smaller chunks. They split it via TA to manage X amount of chunk, and then X amount of chunk will then be broken down into even smaller chunks via distribution. And the distribution folks are saying that, your end client, which is your retail folks, are looking for more specific, bespoke way of investing in assets that they like, instead of just, given some sort of set investment choices. So I think those kind of dynamic coming from end user down to how distributor need to distribute assets going forward will change the way we account for ownership, the way we capture those ownership, as well as the way we transfer those ownership. So eventually it will change, I guess, how investments are being made, whether or not they're more efficient in that sense. So that's from Bank of New York Mellon's perspective. We're obviously a huge funds TA. We're thinking a lot about things like this. How would it change the nature of how ownership being recorded? So it's just going from, instead of just being one system transfer from one person to another, you now break it down into, someone will own a digital representation of their ownership. And legally, if that becomes the ownership, means someone will have to manage that. It will have to go to a ledger, for example. So the security becomes a big question, which is to Anthony's point. You don't want someone else in Korea trying to validate the ownership per se. Sorry, if I lose you, just let me know. But yeah.
Oh, you're good. It makes a lot of sense again. And even just looking at it from a record keeping standpoint, like you're touching upon, there's a lot of regulatory pushing for, I mean, look, the SEC is looking at T+1. I think that's been in conversation for a while, but it looks like next year it actually may have some legs to hit that. And I feel like I've seen multiple sources saying without like a decentralized ledger tech, without a DLT blockchain, how can we really hit T+1? It'll never hit T0 without that. And so when I think about it that way, a lot of major firms their hands may be forced to come to this side of the space. Anthony, any comment?
That's because there's 7 entities between.
Right.
Peter and I want to. You want to sell me 100 shares of Amazon? I want to give you $1,000 for 100 shares of Amazon. If we do it through my broker Schwab, your broker's Merrill, there's 7 parties who touch that transaction before we can settle 2 days later. The cost of capital of 2 days these days is not free anymore. And those 7 parties exist because you don't trust me and I don't trust you, right? And that's fair. And it makes the trade safe. It also injects a ton of cost in reconciliation and all the agency functions, and certainly the cost of capital. It's even worse when you think about something like a securitization. I think in a securitization, I saw a PwC stat, there's 15 different parties within a securitization, tax and accounting agencies, custodians, reporting agencies, liquidity providers, backup servicers, paying agents, a lot of these things that BNY, State Street, and Northern do as well. And they exist to protect investors at the end of the day, which is a wonderful thing. But they evolved in an era when blockchain technology, shared ledger technology didn't exist. And what a common ledger can do is, theoretically, you can give me the $1,000 and I can give you the Amazon shares, bilaterally. I can have for instance, on Provenance, we have an exchange function which holds in escrow your Amazon shares and holds in escrow my $1,000 and will only process a trade when it knows that both sides of the trade are able to fulfill their obligations. That happens T+ instant, and there's nobody involved because I don't need to trust you. I can prove that you own what you have, and you can prove that I own what I have. And this is clearly the future. It's just my old shop, BNY Mellon, and a lot of other service providers have, a lot of, technology that they need to adapt to, a lot of people and processes that they need to adapt to. And it's a process. They're working hard at it every day, but it's turning literally, a battleship tied to an oil tanker, and they're working hard at it and they'll get there, but it's a long time coming.
Sure. I mean, what's the delay in like the mortgage-backed security side? 55 days, I think, from reporting, or just from like data to actual reporting. Like that's
think about it. Nobody trusts the loan, right? So if you're buying a pool of 1,000 mortgages or HELOCs, you're going to have an auditor go in and audit the entire package, and that takes months of time and a great deal of expense. Now, if you could put all the mortgage docs, and the mortgage process obviously isn't entirely digital yet. You still have liens that have to be filed with the counties. You have a title which is filed with the counties. So there's a huge amount of digitization that still needs to happen in that, not necessarily blockchain, but just digitization. But anyway, what you do is you can put all those documents into an encrypted object store, and you can hash those objects to the chain. And what that chain tells you, it doesn't really tell you what's in the documents, but it tells you those documents haven't changed. The second you put one more character into that document package or do something that changes the data, the cryptographic hash is no longer valid. And I'm going down a rabbit hole here, but if you go to audit a package and 99.5% of the mortgages haven't changed, you really only have to audit the 0.5 that have. It just makes that process significantly more efficient at the end of the day. And because of that, it takes cost out. And again, because you're taking cost out, you can lower rates to homeowners.
Nice. Speaking of, we did have one question come in. I assume it says Provenance value the home and at what LTV are you lending? And I know it's not Provenance, it's the partners that build on it. But I assume they can find all that info on provenance.io or at Figure.
Yeah, so we like to think we're the operating system for financial services. And I liken it to you get a new computer, you turn it on, and there's no programs on it. And you have to go download Microsoft Word and Adobe Acrobat and all the other stuff that you want. I would think WisdomTree is a program. I would think what JP Morgan's doing is a program. We're just the operating system.
Mm-hmm. Okay, perfect. Listen, I think we got a couple minutes left. Any parting thoughts or anything I missed that I should definitely be asking or that we should be thinking about?
I think from our perspective, I mean, I I will say that to Anthony's point about the intermediaries and to just take it one string further, I think this is also about financial access and the democratization of that. So again, being able to bring these assets on chain, being able to deliver them in an easier way, and the utility around that is really what's critical here. And institutions will adopt that because there's obviously cost savings, but then seeing that through to the end investor, I think is where this is really game changing. So as we continue to build, I think it's exciting to look at adoption and also just to really focus on how this is a better wrapper than what you're doing today within your brokerage account, within what really the limitations of Web 2 are. So lots more to come, and definitely on the utility side, I think that's where this is going to be a differentiator of being able to, whether it's take a loan off of your alternatives in an easy way through a simple app, or whether it's, buy your cup of coffee using your gold or treasuries. I think both of those are just going to change the way that we use money on a day-to-day basis. And that's all powered by blockchain.
Absolutely. Very well said.
Yeah, I'll just we're top of the first of a sea change. I think it's the early days of the internet in financial services. There's like one of the stats said $16 trillion. We'll see, right? It's a $500 trillion TAM, total addressable market, that we're all playing in here. And there's no reason that, every investment needs a database, right? It needs a cap table. You learn your first day of security servicing that everything starts with the cap table, right? Who owns what you're selling? There's no reason that every cap table in financial services shouldn't be on blockchain. And I think that's our opportunity. And I think we'll get there because it's cheaper, faster, and safer.
Fantastic.
Yeah, I think I echo the other two panelists' thoughts, right? So I guess personally, this is not being Bank of New York Mellon's thoughts, but how I think about it is financial services is just a giant incentive mechanism. Anything that makes it more efficient, we should think about ways of making it more efficient. And therefore, the incentive mechanism can then work as it should be. So that's just a thought, a very high philosophical thought. But if you go from that, everything else should be quick and easy.
Base layer, yeah. Fantastic. No, most definitely. Listen, Maredith, Anthony, Maxson, thanks so much for joining. Thanks for the insights. We'll be keeping some close tabs on all your firms, and always happy to kind of chat. I'm sure things are going to converge a bit more than we expect. So looking forward to more to come. And thanks again for joining the panel.
Thank you so much.
Good to be with you.
Thank you.
Thanks
All right.
again.